Wednesday at 1, it's time to go. Jump in the PTR, let's steal the show. Got questions on trading, we've got the key. TDG's Edge, come learn with me. The Trade Lab's live, don't miss out. Bring your cues, we'll break it down. Join the best, no fear, no doubt. TDG's the greatest crowd.
Welcome to Trade Lab. I'm your host, B-Rad. This is Market Replay for review and practice. We do this on the regular, and we're taking a look at the MYM, the Micro Dow. So let's get started and take a look. We're going to be looking at Friday, June 26th, 2026, and this is the start of the about 30 minutes before the New York Stock Exchange opens for Friday morning. We're looking at, let's take a quick look at where we are. This is the high of Thursday. This is the low of Thursday. You can see the green bar and the red bar up there. And you can see the structure of the candles for both Thursday, the high and the low. Okay, so right now we're looking at the Dow is trading in a neutral, basically a neutral pattern right above T-line, so a neutral slash a hint of bullish at the moment. Inside day down, so we're in a bullish inside day down. The way we look at that is price is above T-line, so it's bullish, neutral, bullish inside prior day, price is inside prior day. And based on the range of yesterday, we're in the lower quadrant, the lower 25 percentile. So we are in a down position at this particular starting point in the morning. Let's take a quick look. We do run the checklist on the Dow, and we can take a look at it right here. You can see at this point it has an ATR7 of 694 points. Current range is around 364 points, and we've already had today's expansion, or this session's expansion, to 52%. And so, like we said, we're holding in a bullish slash neutral position inside prior day range and in the lower percentile. So we're in a down position at this moment on the checklist. What do we see? The one great thing about a Friday is we can look at the whole week and kind of get an idea of where things are. Right now, you can see the low, the session low is sitting at 52,163. The session high is setting up here, right here at this candle wick at 52,521, 523. Okay, that's this current high. That's encompasses this 364 points of range for this particular session at this moment. This is Thursday's action. We are going to look back, and I'm going to look back. I like to look back over the week. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So what do we see when we're looking at the week here? You can see here Thursday's POC, point of control, volume point of control was at 52,418. On Wednesday, the developing POC for that day was sitting right at 52,299. Tuesday, we're sitting here at this level down here, 52,123. Monday, sitting right here at 52,102. And then also all the way out here to prior day Friday, you're sitting, you have a POC, a point of control, right around the 52,055. So if we scrunch this in a little bit, and you can see one thing that I like to draw in is when I see points of control kind of close together in a cluster. You can see it right here, this Friday one here. You can see this one on Monday and this one on Tuesday. Okay. So because that is so tightly together, I'm going to draw a quick little gold bar. So I like to do a little rectangle here at these levels. So you can see right here, these three clustered in here, starting at this low right here to this high. And I'm going to pull it all the way across. And we're going to label it. And I've got a template, and that is the VPOC gold bar. That's just a visual for me to be able to say, okay, the reason why you draw that is because that is a high volume node for this particular last 5 to 6, 7 days of trading, which is price likes to trade from the outside edges back towards high volume. And these stack points of control here represent a high volume node. Okay. If you want to see that in a different viewpoint, you can do in Ninja. You can come down and scroll down to doing a order flow volume profile, and you can have this go across this many days. So you can have a multi-composite of those days. So if we were to pull it from the 18th or even the 17th, yeah, we can pull it even this far back, drag it across these current days. It's going to draw a volume profile. And you can see, looking at the volume of the orders placed throughout that particular multi-day composite, you can see right here the high volume node is right there where my gold bars are. Okay, you can see that's where the POC, the point of control for this multi-composite, is right there. And so I can see it with the stack controls, but you can also draw it and see it this way as well. So take a look at that. I'm going to remove that because that puts a lot of noise on the screen, and I don't like using that as an ongoing tool, except for just a quick visual. So anyway, we have a stack point of control here. We have been trading. We're at the bottom. We're sitting on yesterday's low of day. So that is something that, in terms of what is the next best trade that I'm interested in trading, looking at the Dow and the range trader, the thing we want to be sure to kind of identify are where are the areas to pepper the books. Okay. Real quick background on my trading. I'm going to give you a quick synopsis of what I do. Okay. First and foremost, I trade prop accounts with a standard $50,000 size, and they typically have anywhere between $2,000 or $2,500 of equity or drawdown on that account. Instead of using 10% of $200 as my drawdown, I use $300. And with that, that's 15% of the overall is what I use on these prop accounts. So how do I manage my trades? I can, when trading the MYM, I typically have some ATM strategies. I'll show you right here. This is my ATM strategy for the Dow. I have three basic ones. All of them have a 100-point stop loss, which helps me identify that it's $50 per contract on a 100-point stop. If I put all three contracts on at one time, then I know that I have $150 risk for that particular trade. If I only put one on, I have $50. And if I only put two on, I have $100 at risk per that trade. So that's just FYI a little bit about where I am on that. This is a visual for that. This gives me during the day, how I manage my trades, this gives me the opportunity to mix and match. Okay. I know I've got $300. I can take six different trades, single contract trades, and lose all six, and then that's $300. I can put on two contracts three times, and if I lose all three of those, that's $100 per, and that would be my DRB at 300. Or I could even put on a three contract Dow trade on with that same stop of which would equate to $150 at risk, and I can do that twice within my normal DRB structure. So that's the way I kind of lay it out and look at it. All right, back to the show. We're looking at this particular day. We've identified that this gold bar is sitting here. We're sitting right kind of in the middle of all of this balance coming inside from Thursday's trading, and we're right in the middle of this noise. Okay, so typical range trader rule of thumb is looking at the low of the prior day low and the prior day high as zones of interest. So way up here, all the way up at 53.097s, right up here. This is a offer zone. So you could draw a offer zone, and let's go ahead and do that since this is kind of we're going to work this. Put it right here. So this is just rule of thumb wise. This is anytime we come and look at a chart, we always know that the prior day high and prior day low are areas of interest to be trading. So this would be what we call the offer zone. This would be areas that we're interested in taking a short always is at the high and the low of the prior day. Okay, so this is the offer zone area, and then down here, this green would be the bid zone area. We're sitting right on the bid zone and on T line at the particular point. We have been pushing, we pushed up we had a little mini breakout on Thursday. It popped up and then it rotated back down inside the prior day, Wednesday, and has been trading inside Wednesday's breakout. So at this point in time, I'm not particularly interested in going long right off of this particular low here or even the low of day because I see these gold bars below me. So I'm interested in probably my first long would be down here,
Order
and
submitted.
I don't mind having a $100 at risk with a 100-point stop. That gives me a lot of noise here. I'm just kind of eyeballing this, pushing it up between the two. It doesn't really matter. So that would be my first long. Then looking up here, always you can say this would be a
Order submitted.
this would be a short up here on the brackets. Now, the next one below this, if this level particularly breaks, I see all these stacked ones down here. I would look at another zone at this level here on the structure that we've had for the week. And let's go ahead and draw in probably just looking at these lows right here and these dips, I would say anywhere down in here is on the extreme edges. This is the bid zone. Okay. And pushing down here, definitely be
Order
willing
submitted.
to pepper the book here again. Okay. Now, these are on the extreme sides of looking at structure. Okay. So right now, I've only got three of these trades on. So I've got my DRB here, here, and here. Okay. Now, because of where structure is here and where overnight structure is, and we see this pop up of the bounce of yesterday. This is the afternoon high or kind of an afternoon pullback off of that moving down. It's an afternoon pop or whatever, and you can kind of see that here. So to me, my eyeballs are drawn to this particular little level right here because you can see right here where this wick is currently, this 52,525, that is this session's high of day. Okay. And then this is a level right here at the 5563. So I am looking at another interest zone right here based on the high of day of the session and this wick zone right here. You can see it right there. So if we pull this across, I kind of drew that bad, so I'm going to clean that up a bit. We'll pull that back over here so you can see where the structure is starting and why I'm looking at that particular area. This would be another offer zone of interest, and we would, let's see, just doesn't really matter. Somewhere right on the wick break, on the break above that particular high day, I'd say be willing
Order
to
submitted.
put another order on the line right there. Okay, that is just looking at the Dow, looking at the structure and kind of paying attention to what's going on here that we've seen for the week. We see the gold bar, we see stacks points of control. That's saying that there would be in my estimation a support from the buyers. So this is a strong level of support from the buyers. If that fails and breaks down, I'm not interested in getting into the middle of this. I would then be interested in getting in near the low of this. So that's where I have these peppered down here to buys, and then I have peppered sells up here to look for. All right. So let's go ahead and we're going to speed this up to 50 just so that we can move along. And let's trade the range trader. Here we go. Trade on. All right. We're going to kind of expand this a little bit easier. You can see the structure. This is the price line, the yellow line that's moving up and down a little bit right there. We're interesting. Just kind of watching here. Okay, so you can see we're coming in, it's 8:14, 8:15, so coming into the open of the New York Stock Exchange. All right, pushed down a little bit to that gold bar first and bounced up, did not pick us up. So we did not get picked up there. No worries. And right now the open is happening right now. Ding, ding, ding. The market opens.
Order filled.
Okay. Well, let's see a minute. Okay, so this pushed up. Okay, well, one thing that I'm going to look for here is since we initiated it initiated the buy, we're going to first take profit is at developing POX. Second take profit would be at prior day point of control. Okay. So we're always looking to immediate left of what our next levels to the upside would be on since we got picked up on the long. Okay. So this would be our targets right here. All right. Trade on. Okay. We're $60 into the green at the moment. We still got $100 of risk on this particular trade. So we'll just leave it here. Let her trade. So we're now in the first open candle. It is 8:40. Still holding and picking up orders right here in the gold bar area, this high volume node. So the price is just sitting here and trading in and out of here. for this particular candle. We're 841, 840, whatever. Let me bring this into kind of more what's going on the gold bar. Still orders. So we're taking on a little heat, taking on heat, and look, might push down. Okay, so it's broke back up. It's broke into still chewing up orders on this particular level. I'm looking for support from the gold bar for the current day range. We've been in the trade for almost, I guess, 30 minutes or so. We are still pushing up here to this particular, let's go up to this POC since I just shifted a little bit there. This prior day POC or Wednesday's POC and then Thursday's POC is where we're looking for any kind of rotation through the current session's trading. All right. She's still doing what the Dow does, just kind of taking a good old time. You know, I like to trade the NASI a little bit more, so this is still me in training.
Target filled.
All right, so real quick on the target filled, we're going to pause it. So we picked up and took off that first target. Now we're going to move this into a break-even trade. We're looking for just continuation to yesterday's point of control. Okay, this is like a runner, so you can move this up and you can kind of dial in. I don't know that I want to get real close to it to get waked out, but I am looking for a touch of prior day point of control for my runner. All right, trade on. And it's in a no lose situation on any additional price action. So we're locked in. Now we're just sit and wait. Also, I'm going to put an order down here at the bottom. I'll pick up another order if it
Order
was to come
submitted.
back down and break that. So we have one peppered book waiting on the line right there. So 9:20. So we're almost an hour into the open. It's pushing
Target
up to
filled.
it and it hit the target. Okay, so one thing to note with just that one trade, allowing it to trade, that's $269 that we have just made in that one trade. Okay, so that's where our P&L is at the moment, $269. We're now looking at still, we're not going to fiddle in the middle of the ranges. We're looking at the current high of day. This one's sitting up here. We're even expanded out further for a high of Thursday or high of day, a prior high of day, and then also down here at the range low and at the low of day. So we're just going to trade on. See if the two inside brackets trades get picked up. We're now at the IB has been set. The initial balance is the first hour of trading. So the first two candles have been both green candles. So seeing some continuation up to the upside would not be unexpected after those two 30-minute candles are green. You can see we're rotating this next candle down, retesting this prior day hawk on Wednesday. So it came back, pushed down, and pushed up to that prior day here, and then pulled back and is retesting that level right there. So right now it's just fiddling in the middle and chewing orders up. just filling orders. We're up 269. If this picks up, that's only $100 trade that if we get stopped out, so be it. There's $100. Then we would be looking up here. So right now we've only got $400 of trades risk on with the peppered books. And we have $269 in profit. So you minus that out, we really only have $150 if all four of these particular limit orders were picked up and failed. So you can look at this day and say, okay, I don't have any real dramatic risk. If all four of these trades fail, then I'm only down $150. All right, the Dow's doing what the Dow does, sits there and kind of sits in these little zones. So we're just letting it trade on. Still right there between these, kind of ping pong in between these points of control, which would make sense. A lot of times the price will do that. All right, we're coming into the 1030 candle. So the next, this third and fourth candle is now a green. So we have three green candles. So we have a push up here. We might get picked up. Okay, remember this order sitting at the current session's high of day. And we're looking at this wick right here from the high of the prior day, the pop after the rotation when it came back in. So this little zone here is what we're interested in. We'll see.
Order filled.
Okay, let me pause that a minute. And since we're on speed trading, okay. All right. 10:44 on a Friday. We're already 2 hours into the open. Okay. So we would look here. Take profit would be moving it right back here towards developing POC, and then even looking back over near this low of day here, just kind of where we started at. And looking for a potential migration right back down to the gold bar. Okay. So let's just put it on T line. Okay. And so this is our second trade. We just got picked up and we trade on. Okay, so it wicked up here, took out the high of day for the current session, wicked above it so far, and then is trading back underneath it. So let's kind of move that into more of a visual of the actual trade. You can see the high of day there. You can see it's being, there's selling pressure off of this particular level, pushed it back down inside this here. We're coming into prior day POC. And that could have been, let's put a prior day POC. Let's put a prior day POC since we bounced off of that one first. And then the developing POC. Especially since we've already got some, we've got profit. We're also going to move this inside and reduce risk. So we're going to
Target filled.
Oh, so it didn't even, it picked it up, and we're going to move this to break even. And we will hold this particular level to this. Yeah, I'm going to adjust it to this. Purple line is settlement of Thursday's close. So this is the prior day close. So right now I'm going to lock that in there. And then we'll just see where she goes.
Target filled.
Okay. All right. So we just got, okay. So our second trade has been successful. Let's scale back out so we can see where we are. we now have orders sitting up at these particular lines. We can come back here and we can rinse and repeat. Um, we can rinse and
Order
repeat this
submitted.
particular trade. Uh, Give it a little bit to the top side of this structure. So if it kind of comes back up and tries it again, we're fine. If not there, we're fine. And where we're at on just these two trades, $434 for the day. This is in one account. So if you're replicating, this is an extraordinary moment of where you are on your trading. If you look here on my DRB, the way I set up my DRB, I've got a $300. So I'm now in a large G because I'm I'm above 300 and between 600. So right there, I've got a large G at the moment for the day. So I'm going to go into protection mode. I'm not going to put a lot of trades directly. I'm not going to risk a lot more. So I would probably go ahead and move this buy limit down to making this a one contract trade on any of these because our goal is not to give back. So what are we doing here? If we get picked up and we lose a particular trade, we've only lost $50. That puts us at 434 minus 50, so we're at the 384 for the day. So we're still holding a large G position should something happen, and we would trade on. Okay, so and it's 11:23, 11:24. Typically on Fridays, I'm going to say that I don't trade uh, too much in the afternoon on Fridays. I feel like a lot of traders, a lot of the big traders are taking off earlier or done for their week or locking in profits or whatever. So I don't tend to see a lot of action in the Friday afternoon, so I typically would not be trading too far into it. And plus, I like to go have lunch and with buddies and whatnot, or play golf or whatever we want to do, depending on if it's here in North Texas, you might not be able to breathe at Friday afternoon. So I guess you would have to go watch World Cup or something like that. All right, 12 o'clock. We'll look here, let it rotate into the 1 o'clock hour, see if we get picked up. Where are we trading at? We are trading on the outside edges of the current day session. That's where we're looking to get picked up. We have extreme outside edges from the low side down in the bid zone of the week. And then on the high side, the high offer zone up there around the 53 119s is the high of the week as well. And it also happens to be prior day's high of day. 12:28, we're sitting here. The Dow likes to go to sleep sometimes, so we're going to call it here in the next couple minutes. Just for your sanity and mine. So anyway, let's do that. We're going to call it. So we only took two trades today. You don't have to take a bunch of trades. You don't have to take a trade every minute or take three trades in the PTR or whatever. That's not what trading's about. Trading is looking at key levels and why. And you need to be able to explain to yourself and to others why are you taking a trade and what is your logic. And that's something that only you can do with practice, practice, practice. You're going to have to work on it on a regular basis. And the better you get at it, the better your skill and the better your odds, the better of turning profitable days into a regular versus an accident. So these are the kind of things that you definitely want to work on. So anyway, Thank you for playing along, trading along. You guys have a great day, and we will catch you in PTR on Monday.